Hey guys, hope you are all having a great day so far. Today we are going to go over the important things you need to know about to prepare yourselves mentally ahead of what could potentially be yet another volatile trading session. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. The worries about what will happen in Russia are increasingly weighing on how investors buy and sell. We learned this past week that it is also affecting how the Fed will tighten monetary policy in the coming months. Investors have priced out the potentially hefty 50 basis point rate hike, which allowed some growth and tech stocks to bounce just a little bit. The threat of higher interest rates has receded, but that hasn't made investors feel any easier. Geopolitical concerns have propelled oil prices, prompting fears of slower growth and higher inflation for the rest of the year. Crude topped $115 a barrel this week, hitting the highest level since 2008. Other commodities also surged as well, such as wheat. Talking about the grain markets, there is enough reason to believe this could be the biggest supply shock to global grain markets in our lifetime. Soaring commodity prices will stoke inflation, which is already running hot. The truth is that the Fed has to contend with a very volatile situation, the war in Ukraine, and has had to shift plans to be less aggressive. This current growth in oil price is a very serious danger to the economy. The general rule of thumb is that a $10 increase in the price of a barrel of oil leads to a 0.2% increase in inflation and a 0.1% hit to growth. This week, we have very important economic data coming out. U.S. inflation data is due on Thursday, and considering prices in January grew their fastest in nearly 4 decades, I don't think the numbers will be very bullish. The run-up in U.S. Treasury yields has stalled, with the yield on 10-year Treasury notes climbing over 50 basis points to start the year at 2.065%, but pulling back to 1.74% as it was measured last time. The global economy is going to be slower due to all that is happening, capping rates and making investors less prone to start aggressively buying. Putin and the way he has handled this conflict is incredibly unpredictable, and as such, until the situation halts or is remedied, we will continue trading unpredictable with high volatility. A big question I have seen is, at what point do oil prices cause a recession? Well, some research has been done about this and publicized by outlets like CNBC. The research suggests that 3 out of the prior 4 periods where oil prices spiked occurred during recessions. Rystad Energy expects a plunge in Russian oil exports as much as 1 million barrels per day. They also think there will be a limited Middle Eastern space capacity to replace these supplies, which will result in a new impact where oil prices potential climb beyond $130 per barrel. However, I do not want to make the impression that oil prices can only continue going up. Citi's commodities team released some analysis saying that it is becoming probable that oil prices peaked already and could soon begin to consolidate near at the top. They also placed a caveat here that this would require de-escalation in the Russian invasion and progress on talks with Iran. But this doesn't answer our question of when does oil lead to a recession. Nicholas Colas, the co-founder of Data Trek Research, has had plenty of experience in his career where he has experienced and had access to presentations and data where he can pinpoint where oil shocks are likely to happen. He said in an interview that the general rule of thumb he learned from the auto industry economics in the 1990s is that if oil prices go up 100% in a 1-year period of time, you can expect a recession. A year ago, on March 4 of 2021, crude oil was $63.81, and it is currently sitting at $115 or so. Nicholas did point out that oil prices need to be persistently over that doubling, staying at around $130 rather than merely spiking and pulling back quickly. A day or two is fine, but a few weeks is going to have big consequences down the road. It is important to note that recessions don't happen all that often and that the research to back this theory up is limited in scope because of it, but this is what the numbers have reflected to be the truth so far. So with all these news and information in our minds, we get a general outline of how things could go. AMC and GameStop don't have any catalysts coming up this week. The only thing I can think of is AMC showing big box office numbers for the new Batman movie, which is breaking March records, and GameStop could potentially make a surprise announcement for any product or service. With that said, let's talk about performance. Before we start, I just want to remind you guys those expectations are based on what I think is most likely to happen, and chances are we will trade very differently. I just want to highlight the points where we are more likely to find support and resistance based on historical data, but that due to how volatile markets are, these points might not do anything to the prices, so take this with a grain of salt as a mere suggestion and not as gospel of things to come. Beginning with AMC, the stock had a great performance towards the beginning of this past week. It continued running up, continuing its bounce from $13.8 to over $19 on Tuesday. AMC had that big earnings report, and the anticipation was partly what drove a lot of investors and traders into it. However, after the report came out on Monday, AMC began to fall down as soon as the next day, breaking under 18. As the days went by, AMC would continue closing below the previous closing price, and on Friday, with that big scare and market sell-off with Russia target nuclear plants in Ukraine, AMC closed at 16.57. I think AMC is very likely to find support at 16.50, 16, 15 and 14.65. Resistance is likely to be found at 17.50, 18.50 and then at 19.50. With no more announcements to come this week from AMC aside from box office numbers for Batman, I find it very likely that the stock will continue to follow the general momentum of the overall market and the major benchmarks. Any bad news coming from the war, such as more nuclear reactors being targeted or further escalations of war, and I think we will begin to see further AMC price bleeding, inching its way to 14. If the news are general neutral or positive, we could perhaps begin to see a bit of consolidation and even some upward movement. As of right now, we are really all the mercy of what Putin does and how Ukraine is able to fend it off. I would have never imagined we would be here right now. As for GameStop, the stock enjoyed a little rally on Monday, moving from 118 into a bit over 226. Tuesday, GME would rise a tiny bit higher before a sell-off that would continue all the way into Friday. I believe that initial rise in performance was due to higher volume coming in to buy it, as GME reacted fairly similar to AMC. The same algorithms that short GameStop short AMC, so it makes that type of bullish performance in anticipation for great news very predictable for one and the other. GameStop closed at 111.66 on Friday, quite a drop from the 126 it enjoyed on Monday. As for this week, I find it very likely that support is more likely to be found at 108, 105, 101, and 98. Resistance is likely to be met at 116, 122, 125 and 130. Just like I said for AMC, we are at the mercy of what happens in Europe. Right now, I am looking way more into oil prices, as the growth on those will determine how likely the overall market is due to continue falling. Remember, for every $10 increases in oil per barrel, it means 0.2% growth in inflation. We have inflation economic data coming out this Thursday, which will give us some perspective as to how we have been performing, and I am bearish on that data. I highly doubt that with all these things happening in the world, we are set for good news. I think inflation is going to grow even further, and I strongly believe we are going to be very close to 8%. In fact, I would not be surprised if we even reach 8% inflation or higher. Anything above 8.2 and the markets are going to have a very knee-jerk reaction. Fed officials will not be making public addresses in the quiet period leading up their next meeting. According to some economists, they expect inflation to rise to 7.8% year over year, from 7.5% this January. The risk is indeed on the upside, like I said. As we get an 8%, we could see more investors turn very bearish and see a big sell-off. Anything above 7.8 is being pivoted by economists as really bad. The short run is that there will be a lot of uncertainty in this week, so expect tons of volatility. Right now, I would say to keep your eyes on the lookout for potential sanctions of Russian energy. The US and its allies have not yet imposed any of them, but that is not to say it won't happen. Already, the government is being pressed to start imposing sanctions on these sectors as well. If that happens, I think we could see further sell-offs. Keep your eyes glued to Iran, as we are watching to see if the governments can strike up a deal that would allow them to sell oil on the markets in exchange for an end to its nuclear programs. We could then see them bring in 1 million barrel back onto the market. And that is all I have for you guys today. I know we covered a lot, but it is super important for me to have you guys equipped with all the inflation needed to understand the forces causing all these changes in the markets and the world as a whole. I can only hope that everything made sense in the video, so if you have questions, do let me know down in the comments below and I will try to address them. Also, consider joining my Discord. We have almost 4,000 members in it and it is very active. There will be tons of updates and information being shared there every hour in relation to the markets, the war in Ukraine, GME and AMC and much more. Come join it already. If you haven't, I will leave a link down in this video's description. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day. Keep on buying the dip and to the moon.